Hi, and welcome to this video about how to balance an existing model. This was inspired by the large number of models that were submitted on the team project which did not balance, and also as another opportunity for you to reinforce how much you know about how to get around a balance sheet, cash flow statement, and so forth. So I put together this model balancing cheat sheet as I was grading the models to make note of what people were missing. And one of the things that came up repeatedly was people not remembering to plug their cash from the bottom of the cash flow statement. That may have been on purpose. If they were having a hard time to get that to work, they may have tried to find another way around it, but it's critical that we bring that from the bottom of the cash flow statement. A simple check of the math is easy to say, but hard to do. It's easy to miss those signs and subtotals and parentheses, particularly on the cash flow statement when we are subtracting off a change in an asset. Easy to miss that negative sign or miss those parentheses. Also, notice that a few people tried to forecast their gross fixed assets and their net fixed assets independently. But remember, we can only forecast one of those and then must calculate the other one from the accumulated depreciation. If all else fails, then come to this table, which will walk you through your balance sheet, and you can check the math on each item in the balance sheet. There are a few exceptions, but in general what we're doing is we're calculating a change in a line item, and then we're taking the negative of where that showed up on the cash flow statement. Important to remember that current assets exclude cash, current liabilities exclude debt. Those two statements aren't true in accounting, but they're true in modeling because we need to keep our cash separate. So if you want to have a current assets line that includes cash, that's fine, but somewhere we need to calculate the change in current assets excluding cash, and similarly the change in current liabilities excluding debt. And then there was one major item where I should have spent more time in class, that if we had an asset account or a liabilities or equity account that came in from our original statements and we restated it and for whatever reason chose to keep a line like that, then we also need to reflect that change in cash on the cash flow statement in order to get things to balance. That was probably one of the most common issues and one that I did not take points off because I don't think I covered it sufficiently in class. So a lot of these practice problems that are coming your way today will involve those two issues. So rather than take you through this table anymore, let's try an example problem. And I'm going to make a copy of it in case I'd like to come back and try it again. This is an actual model that was submitted and it had a few errors. I simplified the dashboard out of it just to make this video easier for you and your practice on this file easier. First thing we notice is that it's blown up, so let's fix that. So we know how to fix a blown up model. And now let's see if it's in balance. Unfortunately, it's not, but that's good for this video. It gives us something to talk about. So I'm going to work my way down the balance sheet items. So let's assume that I've tried to check all these other items and I missed them. But I'm going to start with cash, and I'm going to see if cash really is the sum of our three sources of cash. So first let me set up a couple of columns over here. I'm going to call one, insert a symbol for delta, and say change in balance sheet item. And then I'm going to say calculation check. And so a change in the balance sheet item would be this year minus last year. And the example of a calculation check would be from my table on the previous page. This should be the sum of my three sources of cash, here, here, and here. It was not, so let's check it. 9,520 is not my net increase in cash and cash equivalents. Looks like this team, were doing a great job of calculating the changes in all these balance sheet items, and then when they saw a net increase in cash, they said, oh, change in that. But really the whole purpose of building this consolidated statement of cash flows was so that here we could calculate the sum of this, and this. And when I calculate it that way and pull it from the bottom, now my change in cash here matches what it should from the bottom of the cash flow statement. Let's check and see if my change in current assets is equal to the negative of that item on the cash flow statement. Great, it is. Let's do the same. You can tell I'm going to be doing this a lot, so I'm just going to paste that change in formula. So I can calculate the change in these two columns all the way down. And then for my fixed assets at cost, I can take the negative of this. And notice every time I'm doing this on the assets side, I'm taking a negative. Let's go back and look at that cheat sheet. Notice that on the assets side, when I'm referring down to the cash flow, I'm taking a negative. And that's because a change in an asset, an increase in an asset, means we had to use up some cash to get there. An increase in a debt or liability or equity means that we generated some cash. And so these are positive, these are negative. I know that looks like a lot of crazy symbols there, but I kept these parentheses to show exactly which line you were looking at on my template on the cash flow statement, and then put a negative in front of the important ones and not in front of these on the other side of the liability. So those parentheses and negatives and plus came from right here. So when I calculated the change in fixed assets here, I see that fixed assets went up, so we must have invested about $6 billion. But then when I look at the calculation check, I get a sign difference. And so when I come down here to see the cash flow from investing activities, it looks like a positive $6 billion, even though the fixed assets increased by $6 billion. Well, this is a common mistake, at least for me. I make this mistake all the time. Negative sign, parentheses. So now when we're calculating the negative increase in those fixed assets at cost, we have the negative in the parentheses. And that brings these two numbers into line. Accumulated depreciation is a bit different. If we look at our cheat sheet over here, for accumulated depreciation, all we want to do is pull in the negative of depreciation. So I guess it's really not that different. That's just what we've been doing on all these others so far. So let's look at DD&A and pull it in as a negative, and it matches. And let's look at net fixed assets. Now there's nothing on the cash flow statement that talks about net fixed assets. So let's take the sum of what's above. And so those two add up. So all we're really doing there, I guess, is checking this formula, or checking our math on these. This was where it occurred to me that a lot of people were forecasting this number and this number independently and not tying them together using accumulated depreciation. So far so good. And then if I look at other assets, the short answer here is this is a new line. I don't have a place on here that says other assets. So this team felt the need to bring in this extra line. Wasn't in our template, but it was on the original statements, and they needed a place to put things to make them balance, and that's fine. So we probably need to understand what type of asset that is. For today, I'm just going to assume that it's an investing activity. And so that if I said the increase in other assets is equal to this number minus this number, now I have one to take the negative of. And I match up here. Now it's very important that I make sure that that formula for the total cash from investing activities matches. And then the change in total assets should equal the sum of the changes in assets. Be sure not to grab the gross or the accumulated depreciation. And I'm looking pretty good on the balance sheet, on the asset side of the balance sheet. So let's go through the liabilities and equity side of the balance sheet. So my change in debt was positive 2,000. So here I don't need that negative sign. Just going to come through and take these. Change in accounts payable, don't need that negative sign, and I'm sure that's our current liabilities. Change in other. Here again we have a new line that wasn't on the template. So even though it ended up on the balance sheet, we need a line for that on the cash flow. So let's come down. Let's assume that was a financing activity. I don't know. And take the increase in that other liability. Make sure that it's coming into the total. Notice every time I do that, we're changing that cash number up there, but they still match. And then I can say this equals that change in other liabilities. I forgot to label it, so let me do that now. Didn't need a formula there. And for other, there's also an other equity, it looks like, that was not on here. So I'm going to put it right next to those other liabilities. Make sure it's in the total and refer to it on my check. Now the change in stocks was 0, but let's do this anyway. Change in retained earnings. Not so fast. Here, if I come back and look at the change in retained earnings on my little cheat sheet, the way I want to check that is by taking net income less dividend. This is, of course, because retained earnings aren't even on the cash flow statement, but we can calculate them with the other two items. Net income, and I want less dividends, so this is showing that the dividends were paid out, so I'm actually going to add here. And I get the wrong number. Go back and check this formula. I see that this team was getting a little bit creative and decided that into their retained earnings calculation they would add in a reduction in some other current assets. That was off their dashboard. But a retained earnings calculation should be very simple. We don't need anything from the dashboard. We just need the previous retained earnings plus the retained earnings from the income statement. So as I said, I like the creativity on the dashboard calculations. This was getting a little bit too creative. If I fix that, then I match, and I actually bring this year into balance. But let's check one more thing while we're at it. Let's take the sum of the entire liabilities and equities and just make sure that it matches, and then quickly check for the difference. And we see that all these checks that we made from our cheat sheet worked out okay. And so we balanced for the year that we checked them. Now we could get creative and spread these columns out and copy them over and check the future years just the same. But let's just go back and think about what we changed and copy it over. The last thing I just changed was this calculation for the retained earnings. So as I look at it, I see it's fine, but a good habit is just to select that and hit Control R. And that didn't do it. Now when I brought in the extra balance sheet, cash flow statement items, I didn't carry them across. I could have done that at the time, but didn't. So we'll copy that one across, copy these two across with Control R. And then I believe we fixed a formula right here. So Control R. Probably be a good habit to do those as I was doing it. And those things brought it back into balance. So this was either the driest video that you've ever seen in your life, or something that will help you going forward when you're banging your head against the wall because your balance sheet doesn't balance. And so going through this list, I think, is the key thing after you've checked all the simple things. After this video processes, I'm going to post it and post some practice problems, and it'll get you ready for the test next week. Have a great day.